Hey everybody, welcome back to the channel. Well, another day in the market, another bloodbath apparently. And after yesterday's bullish close, you were thinking the market was going to be higher today? Well, psych! That's what the market had to say to us because for us short-term traders, it just laid out a big, nasty bear trap. I just want to go into this article real quick, and then I'm going to get into the charts and see how the market is looking. But it says the Nasdaq has dropped 5%. I think it's closer to probably 5.5 to 6% as I'm making this recording. There's still some time left in the trading day, but I highly doubt that we get a big rally into the close. But Nasdaq drops 5%, S&P 500, and a Dow Jones sink amid the Fed skepticism and worries about the consumer. And if we scroll down here, it says rates are back on the march higher after tumbling yesterday. A big sell-off in UK government bonds is putting pressure on Treasury prices after the Bank of England found itself in the position of having to raise rates while still predicting a contraction in the economy. The 10-year is up 17 basis points to 3.08. The 2-year, which dropped 14 basis points yesterday, is up 11 basis points to 2.72, so almost retraced that entire move. The dollar is stronger, surging back above the 103.7 level, up 1.1% on the day. Now, while the major averages saw a big relief rally yesterday, the Fed is still hawkish and the markets are still pricing in nearly 200 basis points more of tightening for 2022. Now, this article says that while the Fed likely won't admit it, we're convinced they will be taking a closer look at the impact of long-run inflation expectations post the FOMC, said ING. Currently in the 2.8% area, the 10-year inflation expectation is just about tolerably below the 3% handle, and the Fed would like to keep it that way. Now, I do think that I don't necessarily agree with that statement. I don't think the Fed is going to be overly hawkish in this tightening period. I do think inflation has kind of topped out and is starting to trend lower. So I think they're going to be very careful with how they start raising rates. I think some pretty significant data would have to come out for them to just start cranking at 75 basis points or more, and I think that would be a big shock to the market. But one thing to keep in mind, a lot of people are worried we were going to be going into a recession, but typically the interest rate rises that cause a recession tend to be rather shallow. It's probably not going to be like the 2008 balance sheet blow up that we had that caused that very deep recession and financial crisis, but I do think it's going to present some pretty decent buying opportunities. I do think as well, if we do get into some serious economic trouble, the Fed isn't going to hesitate to start cutting rates again. So I just don't think they're going to be nearly as hawkish as a lot of people are thinking and how the market is making it look like. So I'm pretty optimistic that, we are getting pretty close to at least a short-term bottom. I think today is actually probably going to be a little bit of a fake out to the downside, but we'll get into that when I get into the charts. All right, so let's look at the market charts and embrace the horror, the carnage that is going on at the moment. I still can't believe that the QQQs are at right around 311, and they touched 330 yesterday. And not only did they touch 330, but they closed right about at 330, near the high of the day. This was totally unexpected, but I probably should have known better because there's a few people that I listened to in the market, and they were all having the same opinion I was having. And normally when I have the same opinion as everybody else, that means they're going to run it the other way, and that's exactly what happened. Now, the market gapped down early on, obviously, and I kind of thought that was a gift, so I took that gap down as an opportunity to get long some TQQQ calls and some American airline calls, but those are not working out, needless to say, especially the TQQQ calls. They still have some value left on them. They expire tomorrow, so I'll have to make a decision near the close whether I want to hold on for another day or just get out what I can get out of them. I'll probably end up just closing them out, but I don't know. I'll come to that decision near the close. It doesn't look like we are going to have any bit of a retracement back up before, the market closes. Let's take a look at American Airlines first. I started buying American Airlines when it dipped close to about $19.15 a share. I started buying the $20 call option. And I think I only paid like 7 cents a piece for them, but I thought that we had a pretty good chance of continuing higher, but that is not the case. They're down to about 2 cents at the moment, so I'll probably just let those ride because the option fees are too expensive. But the TQQQ bought the $41 call, and I don't think it's going to make it there by tomorrow unless we just have an insane day to the upside. I'm not even sure what those are worth at the moment, but I might just leave these ones on because if we do get a crazy move to the upside, they could still have a chance of, turning positive. But I think that's a pretty big long shot at the moment. Let's take a look at the Spider. See the Spider, same exact thing. Retrace that entire day, and we are making a lower low than we made yesterday. So that is a bad sign. Let's take a look at the Diamonds, which has been the strongest, and it is not the strongest at the moment. So after a day like this, you kind of get in rally mode the day before, but after a day like this, I just kind of flip back to my buying wish list if we do end up getting some fast moves down in the market. I have been adding a little bit of stock to my positions today just because I don't know, today I feel like absolute crap after, the reversal that we had in the market. And normally when I feel like total crap, that is usually a pretty good day to be buying. I'm not saying that's typically the bottom, but it usually ends up being pretty darn close. And I really haven't felt bad at all on this entire move down. It's only like today where it seems like it's really starting to, kind of wear on me a little bit. So whenever I feel like that, I end up buying. When the market was gapping down here, I put in a pretty decent size buy order right at the open, and that ended up being a temporary bottom. I guess we still haven't taken out this low yet. And I also did some buying on this day as well. So I don't know. That's just one of my rule of thumbs. Usually when I feel like crap and I don't even want to look at the market, I'm like, you know what? I probably better go in there and at least buy something. But one stock that is at the top of my wish list right now that I do not own is Micron Technology. This one is not pulling back very much at all today. But this is one area that I have been waiting for MU to pull back down to, right around $60 a share. If it does that, I'm definitely going to load up on some Micron Technology. I think they have a forward PE of under 8 at the moment. And if it get down here right around 60, I think it is going to be an absolute steal. I probably should be dipping my toe in the water and, just adding more when it gets down to 60. But MU is at the top of my list. I think it's worth you guys taking a look at it if you haven't taken a look at it lately. And in fact, let's take a look at some of the numbers right now. All right, so let's jump over to Seeking Alpha. Definitely one of my favorite websites for when I'm doing my research on stocks. And, if you guys ever want me to research a stock for you with Seeking Alpha, just leave it down there in the comment section, and I'll try to squeeze it into one of my videos. But let's take a look at MU, Micron Technology. We can see it's trading at $70.44, down a little over $3 and a little over 4% at the moment. So this one is getting hit, but not as hard as some of the other tech stocks out there. I was kind of hoping this was going to get hit harder. We can see the forward PE is all the way down to 7.64 at the moment, and they do pay a dividend. It is only 0.41%, but the payout ratio is super low, so I think they're going to have plenty of cash around to continue to raise that dividend up. If we look at the rating summary, we can see the Seeking Alpha authors give it a buy rating. Wall Street gives it a strong buy, and the quants also give it a strong buy. The factor grades give it a valuation of an A-. You see that has risen from the B and the B plus from 6 months and 3 months ago, so it's getting more attractive on a valuation standpoint. Growth is getting a little bit stronger. Went from A- to an A, so that is getting stronger. Their Profitability stayed at an A+. In case you didn't know, that's the best you can do. I never got an A+ at school, so I actually had to look that up. But momentum is at a B+. Surprisingly, I guess just because it's not falling nearly as hard as a lot of the other tech stocks out there. The revisions is actually a B+. I'm noticing that a lot of tech stocks, the revisions are going way down, and Micron is actually holding its own in this environment. Scrolling back to, all the way down here to the numbers, you can see revenue is projected, with the keyword being projected, to continue to increase going forward all the way to almost 41 billion for 2023. Let's take a look at the earnings per share on an annual basis. You can see the earnings per share after taking a dip for a couple of years is projected to continue to rise and in fact get all the way up to almost $13 in August of 2023 when that year ends, versus August of 2020 when it was all the way down to 2.83. So 2.83. It's projected to go up to 12.73 just by the end of next year. So a lot of growth potentially ahead for Micron. You can see the earnings per share from 964 all the way to 1412 in 2024. Earnings revisions, like I showed you before, B+. Growth is an A, valuation A-, momentum B+. That's probably the most shocking thing to me with the way technology stocks are just getting thwacked. Their total debt sits at 7.6 billion, but they have 10 billion in cash, so they have enough cash to take care of all of their debt if they wanted to. The payout ratio is under 3.5%, so they have plenty of room to continue to grow that dividend. You can see they just started paying a dividend. There's 0 years of growth, so you're getting right in at the bottom floor of them paying the dividend. Let's go down here and take a look at the well, there's the dividend history right there. You have to, obviously you can see that they just started their dividend. Institutions own 82%, and the insiders own less than 1%. I wish that was much higher, but it is what it is. All these metrics can't be perfect. All right, now let's jump over to their valuation tab and see how they rank. Scrolling down here, you can see all of their PE metrics, whether it's non-GAAP or GAAP, trailing 12 months or their forward. They're getting A's for those scores. Enterprise value scores are either B's or A's. Price to sales is only 2.65 trailing 12 months and only 2.44 for the forward, their forward price to sales, and those only get B's. I thought that was a pretty low score, and their price to book is for the trailing 12 months is only 1.7. They only get a B+ for that, but their forward is 1.56. They get an A. Now their price to cash flow trailing 12 months 5.48. That is fantastic. That's an A+, and their forward is also an A+. The only score that they're getting a low grade here is what I said before. Their dividend yield, it's only 0.41%, but they just started paying that. I think there's going to be plenty of room in the future to start raising that up. But let's take a look at the growth now. And getting over here to the growth tab, you can see they got an overall score of an A. Their revenue growth, they got B's, and you can see their EPS growth, they get all A's for that. And the only thing they got a substandard score, or at least sort of substandard, was their CapEx growth year over year. That came in at 1.7%, but I've definitely seen worse than that. And let's take a look at profitability before we end this video here. We can see they got an A+ for their profitability grade. Their gross profit margin came in at 46%, and they only got a C for that. I think that's pretty damn good. Leverage free cash flow margin came in at a B-, and their asset turnover ratio came in at a C. I would like to see that in the A grade. That is one important factor that I do like to look at. But just wanted to show you guys the numbers on Micron because if we do get a huge move down in the next day or two, this one is definitely going to be one of my purchases. They are very high up on my wish list, and I just wanted to give you guys a little preview of what I'm looking at for this company, so you can do your own due diligence and see if this kind of fits into your portfolio. But I'm gonna end the video right there. If you guys see anything interesting in the market, make sure you leave it for me down there in the comment section. I would really appreciate it. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.